Welcome traders to another trading psychology series here at Funding Pips YouTube channel. Today we will be giving away two 100k challenge accounts. And today's episode is special because everyone wants to trade like institutions. But only a very few understand how institutions actually think. Their psychology isn't built on magic strategies. It's built on structure, on accountability, an entirely different relationship with risk and emotion. And that's exactly why I wanted to bring Saif into our conversation today, because when we talk about institutional psychology, we're not talking theory, we're talking experience. So today we're breaking down the psychology of institutional traders backed by behavioral finance research and Saif's real experience from managing institutional money. Meet your guest, Saif, an institutional trader with over a decade of experience in trading, investing, and economics. He's managed tens of millions in assets, working as both an asset manager for high net worth individuals and a floor trader in major regional banks and financial institutions. He's a certified technical analyst, a global licensed trader, and was recognized among the top 50 traders in EMENA and GCC region at the Traders Summit 2024. His market insights have been featured on leading TV networks, where he's built a reputation for anticipating major market movements with precision and clarity. And today we'll uncover how professionals manage fear, stress, and pressure in the markets. And you as a retail trader can now today dive into the mindset of institutional trader. Saif, welcome to the series.
Thank you for having me. That was a great introduction. Thank you.
My pleasure. Now, you are already hosting Beyond the Chart series on our Funding Pips YouTube channel.
Yes.
You are also featuring on Trading TV as well, hosting our Funding Pips traders. But today's topic is slightly different, maybe less about data, maybe less about trading, but maybe the mindset behind the scenes, okay? And there is one burning question that I guess all of the traders, retail traders have, which is, what is the biggest misconception about institutional traders and their psychology?
Okay, now that's a great question. The misconception is that people think institutional traders are different, or like they think differently. At the end of the day, they're human, and in order to trade properly as a human, you need to have structure, and that's what institutions have, and most of retail traders lack. So they're not very special. I've been one, and I know some not very special people at all, but they are very mechanical. That's what I can tell you.
So essentially the structure in terms of the certain parameters.
The trading limits, the risk,
yes,
the whole thing. Yeah.
So that kind of helps to kind of enter the market and not think too much, because you have predetermined risk factors,
exactly,
entries, exits, etc.
And you don't need to worry if you lose, because like that part is gone, because first of all, it's not your money. Second of all, I'm sorry for saying that, but it's real. Second of all, because you're allowed to lose that money.
Yes.
Someone higher than you gave you the limit to lose. For example, they set the stop loss for you. They tell you you're allowed to lose 100k, for example. If you lose 100k, nothing wrong will happen. That's just the trading limit or the risk. So it removes that emotional part.
Okay.
So that's actually easier.
Okay, but I want to go back because obviously, now you had over a decade of experience in the field, trading for institutions, high net worth individuals. But what is kind of mental adjustment you had to make from the moment you entered into the industry?
Yeah.
And I mean, at the start, perhaps you felt the pressure. And I compare that pressure naively to the pressure that perhaps our traders may have when they finally pass the challenge, they get the master account. It becomes real.
Yeah.
That now the rewards earning potential is there. What was it like for you? What did you have to change about your psychology?
Well, to be honest, that's that's how I learned it. That's how I learned how to trade.
Mm.
I started trading with banks' money. I started trading big money, which wasn't mine from the very beginning. So that's how I learned to trade. I learned with someone else's money. So the big mind shift was when I left the institutions to start doing my own thing. That was difficult. That was emotional. I failed multiple times, and it's totally different trading your own money than trading someone else's money, especially if they're institutions. And it's also different. Those two are different from trading for someone else you know. So that's why I have this rule. I do not trade for family or friends. I hope I answered the question.
Yes, you have. It's actually really interesting because usually retail traders shift from trading their own funds, however small or big their account is, into potentially trading with props or getting investors on board or starting at the hedge funds, etc., etc. But for you, it was all the way around.
Yeah.
What was it like then? What was the biggest mental struggle when you kind of, okay, I leave the institutions, got into my private account?
I think I struggled with overconfidence.
Okay.
Yeah, that was a big one for me, because when I used to trade for like big institutions, like I have the best liquidity, the best spreads. I have like huge limits, and I'm used to seeing big numbers.
Yeah.
But when I moved to like trading my own money, that was like a totally different game, because I told you I was used to seeing big numbers. I lost so much money at the beginning because like I thought like I'm good enough in the bank. Why wouldn't that be the case in my real account or like broker account? But trading with a broker is so much different. Trading with a prop is so much different. The environment is different between institutions, brokers, props. It's different, and I had to learn to adapt with the environment I'm trading in. I'm not necessarily saying that the institution's environment is better. I'm just saying that you need to adapt to the environment you live in.
Yeah.
You're trading in.
It's different environments, that's for sure. But you said one thing about institutions, it's a structured environment, and that structure mentally is supporting you as a trader, right? And you may not suffer with so many trading psychology problems or emotions, etc. Now, did you carry that structure into your personal trading, or did you lose it a little bit or lost yourself with that structure, and that's why you faced issues because you had no longer a line manager to maybe respond to? It was just you.
Okay, to be honest, I messed up a little bit at the very beginning, but then I think that's the best thing I took from trading with institutions. It was structure. And me as a person, I know myself, like I understand myself. I function better with structure.
Okay.
Some people like to like improvise and go off the bat. Me, no. I like to have everything structured. I need to have a plan. I want to plan how much I'm going to lose in one trade. I want to know how much if I'm going to lose, how much I'm going to lose. If I'm winning, how much I'm winning. I like to plan approximately how long the trade would take, like time-wise.
Yes.
The whole thing. And I think this was the biggest strength I took from institutions.
Amazing. Now, I want to actually build on that question, what you just told me as well. So, structure is important. Now, as retail traders, which I personally started as a retail trader, still a retail trader, but you don't have structure at all. You know, it's kind of like you want to detach yourself from 9 to 5. That's usually why people trade, right? We want to quit our 9 to 5s and be full-time traders, have the freedom, etc. But then actually those traders become slaves to their charts, and they overexpose themselves to the charts and overtrade, etc. There is zero structure because traders don't even know how to develop one because they may not get the right guidance. They don't know what a good trading plan should look like. I mean, you summarized it, in terms of what's your entry, what's your exit, how much are you risking, the potential length of the trade.
What are you trading?
What are you trading? Yeah. Is your approach backed by data? Yeah. Which is extremely important. You and I off camera yesterday had a conversation about journaling, that you are really paying attention to every single trade that you are taking, so you are learning from it. But obviously that's not the case for a lot of retail traders, and they kind of want to have the structure, but they don't know how to implement it. If you had to advise a retail trader what they should do, what would your advice be? So you see a new trader walking into the space and they kind of lost. What would be the kind of steps that you would advise them to take?
Okay, your personal coach should be your journal. Mm-hmm. You start with journaling. You start spotting patterns of behavior. You start seeing what times of the day or what times of the week you trade better. Yeah. What mistakes are repeating. You start seeing. You wrongfully think that I trade very well on gold, but when you look at the journal, you discover that no, you actually always lose on gold. So, or like you had like multiple wins, but they're not really good trades. So you better focus on Euro USD, for example. So what I'm saying is you need to start with journaling. That would give you how to say it? It will give you the mental clarity to start planning further than this trade. Yes. So I think journaling is so underrated.
It's extremely important. I tell you something from my personal experience, and this also goes for backtest. I was always the type of trader I would have rather to observe the market live, and see what's happening, do paper trades, etc. Because that helped with my patience, anticipation, waiting for the market to play out. But at the same time, I could not test big chunks of data. I used to really dislike backtesting, but then I had to kind of, don't really care. I had to do what I had to do. You don't like all of the parts of your job. Doesn't matter. I had to do it. What was important for me when I collected that data, anytime I was undergoing a losing streak, I would go back to my data. Uh-huh. And I would go back to my data and say, it's okay. It's okay for me to even have 2 weeks in a loss. And at the end of the month, I'm going to be all right. Yeah. If I just continue and stick to my plan and don't lose my head in the process of it. Yeah. So I think data can actually support you not only with your edge, but give you that mental clarity and peace that when you look back, you understand what you can anticipate based on the previous patterns. What it helped me with as well personally was understanding my losing streaks, my win rates, what you said, best trading days, worst trading days, what you think works doesn't actually work.
Sessions,
Absolutely. Until today, Monday is my worst trading day. Yeah. Do I sometimes trade on Monday? Yes. Should I? No. But it's full transparency.
Let me tell you what the journal does to you. You know that your worst trading day is Monday, right? Mm-hmm. But sometimes you do trade on Monday.
Yes.
Knowing this information would do the following. Instead of risking 1%, because it's Monday, I'm risking 0.5%.
There we go.
That would make a huge difference.
Absolutely.
Yeah. And like journaling is not also just like to focus on the bad stuff and like fix. No, sometimes it helps you see how good you are.
Yes.
Sometimes we forget how good we are.
Absolutely.
Because like we're human, we forget. So when you go back and you see, oh, that was an impressive trade, it boosts your confidence, especially in times of what's it called, like a losing streak, for example. Yes. So it's good to have a journal. It's the best thing to have is a journal.
Absolutely. I completely agree with you. But that all goes back to structure. And I want to ask you a question. Actually, 2 questions. Let's start with number 1 is institutions. So why don't you kind of talk traders through what your day would have looked like in an institution? You walk in, sit at your desk. When do you analyze? What do you do? Because I believe there is structure in the markets, but there is also structure in the office.
Yeah.
What does it look like?
Okay, so let me start by explaining how the trading desk works. Like you have a treasury department, and you have different desks. You have like capital markets, which like is responsible for bonds, equities, and so on. You have the derivatives market, which is responsible for options, interest rate swaps, cross currency swaps, and so on, and futures, by the way. And then we have money markets, which is the interbank trades, the repurchase agreements, and so on. And then you have the trading desk, or as we had it, the FX desk. So when you trade, when you trade at like for a bank or as a bank, you don't just like buy from someone. Like you have your accounts, you have euro accounts in like European banks, and you have your GBP accounts in British banks, and so on. And what you do is, if you want to buy euro, you actually feed this account with euros. You exchange the dollars you have with euros, and vice versa. So the first thing you do in the morning is check the bank's positions, because maybe while like the treasury or the trading desk wasn't there, people buy and sell all the time, like all around the world. So the first thing you do is you check the bank's position. You see, are we overly exposed in euro and GBP? Based on your analysis, you decide, do I need to cover this or just leave it? Because like I see that euro is still going up, so no need to close it now or to cover it. Or if you want to add to the position. So that's basically the first thing you do. And then, of course, the morning huddle, you have you have your coffee with the head of trading, with the head of treasury, and then you discuss the markets. But other than that, after that, like the minute this huddle is done, you're on your own, and you're not allowed to share thoughts. You're not allowed to share.
Very interesting.
Yeah.
I was going to actually ask that whether you guys would discuss your analysis, your forecasts.
The good ones don't, no. Yeah.
Okay.
And the good ones, like, let me tell you something. When you see when you walk into a dealing room, you see like it looks like a poker table.
Okay.
Full of poker faces.
Okay.
You don't know who's losing, who's winning. You don't know who's making money, who's losing money. And I think that's very important. Those people manage to become robots. I'm doing my job. I'm not winning or losing. There's no such thing as winning or losing. I'm just doing my job.
I'm just executing my analysis.
Yeah.
That's it.
So
it's just another data point.
So no excitement for making money.
Yeah.
No anger for losing.
Yeah.
No nothing.
Okay.
And I think that's one of the biggest strengths.
And you know, okay, I understand. Like you kind of are trained this way, right?
Yeah.
So by the time you step your foot into the institution, etc., you have certain training you undergo.
Yeah.
And then obviously there is strong structure and risk parameters, and even having that sense of the team that you are all at the same trading floor and you see the guys and everybody's focused. Your performance boosts. But did you not feel any type of pressure? At any point, this young guy walks in his first year, or second year. You can potentially see other traders with over a decade of experience. Yeah. And you walk in and you said, huddle, then you're on your own. And then what? Did you not have this pressure on your shoulder and think,
Well, I did have that pressure.
Mm-hmm. How did you deal with it? Like, what did you do?
I don't know, like you're the psychologist, you tell me what that means, what I'm going to say now, but I loved it.
Amazing.
Yeah, I loved the pressure because it was so challenging and the competition was very high that like I was in for, like I'm competing with the brightest minds in that place.
Yeah.
So I'm gonna beat them.
Beautiful.
That was my that was my thought process.
Beautiful. You know, from the psychological standpoint, this is where actually, I'll give you a simplest example. Sometimes when you see university students and they might have a deadline in 2 months, but they wait 2 weeks before the deadline, before they start work, because actually performance under pressure is highly rated, and we do then enter the hyper focus where all of our senses, our mind, logical thinking is extremely fired up in our brain because we have that pressure of time. We have no choice. And as individuals, we do work well under that. Of course, there will be individuals who there's certain characteristics and personality types. Of course, there will be other people who will crack under that pressure. So this is where perhaps, would you say, just from experience, that there is perhaps certain personality trait or characteristic of a trader that you have noticed that...
Grit.
Yeah?
Yeah.
Yeah.
That's it. Yeah. It's everything in life, not only
that's
trading.
True. Yeah. That's true. And I see that a lot amongst retail traders.
Yeah.
Because they have different type of pressure they're going under. Let's not lie, a lot of people do trading because we want to secure our families. Yeah. We want to get out of certain situations. And, we see as a way out of something that we can do on our own, etc.
And it never works.
It never works. Yeah. It never works this way. For some does. I've met some traders that it has worked out for. That actually, it was kind of like, I either make it or I don't. I'm going all in here, and I have to figure out a way to make it work. Okay. And they figure out the way to make it work. But there are others,
a very small percentage.
Yes, very small percentage.
And let me tell you why it works with those few people. Because they focus on the process, not...
Yeah.
They had their eyes on the process, not the destination.
Yeah, absolutely.
Yeah.
And honestly, I've proven to myself so many times that in trading, less is more.
Yeah.
The less you participate in the markets, the less you overexpose yourself to the market, the less risk you use. At the end, you're going to get more.
Yeah.
You'll be more consistent because it's about pacing yourself out. I would rather to have paced out few months with smaller profits or break even months or whatever than 1 month. That's huge. And then it has a huge impact on the psychology, a huge one. Now, there is one thing that I notice amongst our traders that I speak to sometimes in success stories or when we connect on Discord, etc. Traders do have fear of losing, but also they have huge fear of winning. This is where they cut their positions short when they are in profit. Have you ever experienced that yourself? If so, how did you deal with it?
Of course, that's instant gratification.
Yeah.
Like, I'm not gonna step on your shoes. You're the psychologist. Would you like to share the marshmallow experiment?
Absolutely. Yes. The marshmallow experiment, it's quite popular, and you actually see it now. A lot of people actually created TikTok trends out of it. It's with children. You put marshmallow in front of your child and you say, hey, let me leave the room and don't have it. But when I come back, you get 2, and then you can have it. And it's about whether you are able to kind of, not have it and
delay that gratification,
or whether you are just going to go for it because you want the instant gratification rather than have to. And they do it purposefully at the early stage in childhood development to kind of notice whether it's an innate behavior type of part of your personality and character, or whether that is something that you learn. We are in a society and world that instant gratification is everywhere. And those quick dopamine hits is what we are chasing. Which now leads me to another question. We talked about structure. But now I want to understand whether you have structure in your life in terms of, because you said, in terms of you trading now on your own and moving away from institutions, you said structure is really important on the charts and you want to understand everything before you even enter the market.
Yeah.
You have everything planned out, which makes sense, traders, because when you have a plan for everything, you are less likely to engage in emotional behaviors.
Correct.
It's almost like having a scenario A, B, C, D, E. If also things go wrong, which I always encourage traders to have a plan. What if you enter with 3 lot size instead of 1 lot size? What do you do? Because if you actually make that mistake, which happens to all of us, we may start panicking. Oh, I don't know, let it just move into profit. Do I close the... But imagine this scenario is going to happen. What is the plan? Am I going to close the remaining 2 lots? Am I going to hold the position? I'm going to exit the position.
The trade management has to be...
Everything, because actually you're right, absolutely. Exits are so important in the markets.
Yeah.
Exits and management of it. Are you going to allow it to play out? But I do believe, as a psychologist, that you do have to be a disciplined person in at least some areas of your life in order for you to be a disciplined person on the charts. What are your thoughts?
I strongly agree with that, because most likely if you have a messy life, your car is a mess, your house is a mess, you're most likely not going to make it in trading. Because I don't know, when we were speaking like yesterday or the day before, I told you, like, I've never seen any successful trader who is not organized. The time they the time they wake up, the time they sleep, their diet, everything has to be on point, so that they can have the mental clarity to make good decisions in the market, because we're in the game of making decisions. So as I train my students from the past, I used to tell them, you need to figure out what you're wearing tomorrow the night before. Why? Because you don't want to bother your brain with
mental fatigue.
Exactly. Like just save your brain power for important decisions. You're going to trade tomorrow, so finish all the small stuff the night before. So when I was mentoring those people, it made all the difference.
I can see that. I can imagine that. I always compare traders to athletes. So let's look at Ronaldo. And
he would make a great trader. By the way.
Right. And it's about his mindset, though. Okay, we're not going to go into debate Messi versus Ronaldo. It's about the mindset.
Both, by the way.
Same, to be honest. But Ronaldo's mindset is different. He is very structured. He's very rigorous with his routine, and you watch the interviews with him. He did it. He worked his way up.
Yes.
It was pure hunger. It was pure hard work. It was a pure discipline. Till today, he says, "Do I want to train every day? No. Do I want to stick to certain? Well, I have to, because there is. I remember one interview he had given. I usually watch his interviews. I genuinely really appreciate the way he thinks and his discipline. And he said in that interview that a lot of people may say, "Oh, I wish I was Ronaldo." And he says, "But do you?
You cannot.
Would you be able to live up to the discipline standards that I'm living to?" And if someone says, "Yes, I would be able to," then I'm like, then be a trader and do that. Exactly the same, because then you would be a damn successful trader. And I strongly believe that, and the reason I compare that to being an athlete is because we have to make decisions, and our brains are extremely important. And in order for you to have that mental clarity, you do have to have a good diet. You do have to move your body. You have to exercise. You have to understand yourself and calm your mind. You said, I understand myself as a person, and I wanted to come back to that. How did you get to know yourself?
Again, journaling was a big part.
Yeah. Okay.
And talking to close friends helped me understand, because when you're talking with a friend, they just they're not gonna sugarcoat anything. They're gonna say, no, you're this is bad. This is wrong. You're this way. You're that way. But in a constructive way, of course. So sharing with people who understand or who know you well and know your intentions can help you big time in understanding yourself, because they would give you feedback
True.
on you, like when you're inside the situation, you cannot think clearly.
Yes.
People from the outside see it clearer than you do.
Yes.
So feedback is very important from when you're not at your best. Journaling can help, and reflecting is very, very important. Just like reflect, think, go over your day, see what happened. I acted or I reacted like a good person here. I didn't react like a good person here.
Yeah.
Why did I think this way?
Yeah.
I saw this person. The first thought was this. Why did it happen? So start those conversations with yourself. You'll get to know yourself, and that's actually a very helpful thing. And even spiritually, it's good.
Yes.
Yeah.
Yes. 100%. It makes absolute sense. So can I just clarify that when you were journaling, were you also journaling your thought processes?
Of course.
Okay.
That's the most important thing to journal, by the way.
And honestly, and this is something that we have to mention, because traders do forget that. You know, pardon me, I see so many traders journal on their spreadsheets or have automated now dashboards, etc. Even our Funding Pips dashboard, you know, it's excellent when it comes to data. You can really understand your trading patterns, etc. But this is what traders think it's, oh, I have my data, so I understand. I have my screenshots. But it's not just that.
It's not the same.
What did you think before you entered? What did you think? Did you have any hesitation?
Were you confident?
Exactly. Yeah. This is why I always say to myself, I would put the trade and I would say I hesitated when it was about execution time. And I put that note there because I want to understand why I hesitated. Yeah. Because it will now go into the mental fatigue, because you said something significant here. Prepare even what you're wearing the next day. Yeah. Now, I may notice that it may be Friday, and even though Fridays are statistically speaking my good days, but that week I might be tired. There may have a lot of things that have happened during that week, and I may not be able to make good decisions. I had a bad night's sleep. Actually, for me, sleep has a huge impact, huge impact on decision making. My decision making processes or abilities to make fast decisions are disabled if I have not slept. I've noticed that, you know, a lot.
Absolutely.
So there is a lot of factors to consider what led to hesitation, confidence, overconfidence, etc. So those things are really important. Now, I don't know whether you know, but you know, when Warren Buffett is trading, apparently what he does, he locks himself in a New York apartment. He eats the same, wears the same, and he does everything the same. Not to make decisions about anything.
He's been doing the same thing for like the past 70 years, maybe. He's like 300 years old or something. Anyway, so talking about journaling the emotions, that's very, very important. And let me tell you what I discovered, what I personally discovered. I discovered that the trades that I wasn't very sure about worked better than the ones that I was sure about. And that changed the whole game. So that's how important journaling is.
Yes.
Don't listen to yourself, just write it down. Yeah. Like, don't count on your emotion or like the way you feel or your guts. You think you have good guts, just write it down. Yeah.
I agree. And I remember once Khaled came to join one of the trading psychology sessions, and he said, you have to train your eyes and your finger to click at the right moment, to recognize a pattern and just do it over and over and over and over and over again. And there is truth to that, because what you said about, you know, institutional traders being like robots there, they are just executing their job. But it's a different type of trading. What was the longest trade that you ever held? Or how did you remain patient? I mean, I accept that institutional traders are trained a certain way, but at the end of the day, guys, you are still human, you know, and you will still struggle with certain emotions. Obviously, those emotions will be minimized due to the structure, due to environment, due to a lot of different factors, but you're a human. You still have patience levels, you still have some type of intrusive thoughts, some stress in your life, not just
Yeah.
at the job, you know, how do you remain patient? Patience is the main thing here
Yeah.
that I'm trying to talk
Correct.
about.
Okay, my longest trade ever was Euro USD. I held that trade for a year and a half. Obviously made money because otherwise it would have closed much earlier.
Yeah.
How do I, or how do we wait this long or have the patience? I'd say why not? Like that's my answer. Why not? Why attach yourself or marry your position? It's just a position. Come on, like you're not like as we say in Jordan, you're not holding it on your back. It's just like just leave it. If
Yeah.
it's still running, just leave it running. So my answer is why not?
But see, here, sometimes I see traders not
Yeah.
being able to hold a trade for the duration of a 1 hourly candle. You know, they get impatient, etc. I see some traders who are excellent. You know, I saw one of our traders, actually, he was part of the success stories, and he sometimes trades on Trading TV, Diddy. And he held a gold position the other day. He posted it on Twitter.
Yeah.
And he was in a huge consolidation for a very long period of time. And then finally, and honestly, I commented, I was like, great hold. Amazing hold, because his stop loss was quite tight as well.
Yeah.
And he did not budge. He did not move it to break even. He just stuck to his analysis. He stuck to his profit targets. And that was that. And I really admire that about traders, that when they are able to do that, you know, especially trading from home and, you know, self-taught traders, etc. It's really, really nice to see. Can retail traders train themselves to be institutional traders or think like institutional traders?
Yeah.
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 Okay.
Yeah, definitely. But can they become institutional traders? I think like that depends on the situation.
Yeah.
You need to get certain licenses. You need to get like certain certificates.
Yeah.
And then and you get to get hired by one of those institutions. That's how you become one of them. But thinking like them is very easy. You think they're like unicorns. They're not. They're very normal people. They're not special at all. I've seen retail traders who can easily kill all the
Really?
all the institutional traders
Wow.
I know. Some of the people I know like in the retail space, they're monsters. Imagine I'm gonna mention Rosa here.
Yeah.
Imagine Rosa in a bank. Oh my God, she would clean up. She would clean up.
That's amazing, actually.
Yeah.
And Rosa is a very structured trader, by the way.
That's why I mentioned her.
Yes.
Yeah.
You guys should watch every Wednesday. Saif and Rosa on Trading TV on YouTube, and you can really learn a lot. There is a lot of value because one thing about her, she's just very same setup.
And by the way, she thinks like institutional traders. She does not trade. She does not trade like institutions.
Yes.
But she thinks the way she's structured and the way she holds herself together is amazing. Okay, so what? We lose this? No problem. We try again. Oh my God. The same. I'm gonna take. I asked her a question the other day. I was like, how do you decide which setup are you taking or not? She said, no, I take all of them. If the setup is
during
there,
her trading session, she would just take all of them.
She would take all, like she gets maybe 60 setups every day, but in her session, like she gets 1 or 2. Every time she gets a setup, she enters.
You know, I knew a trader like that, female as well.
Yeah.
I don't know whether that's a common denominator, but she, some sessions she would have 3 setups. Other sessions she would have 10 setups. If they showed up, she would take them. She was like, if the markets are playing, let me play the game.
Yeah.
Because my job, that was her mindset. My job is to capitalize on the markets that are moving well. And if my setup is not there is no trade. That's it, as simple as that.
Think about it. Like sometimes at work, you have like a lot of work. Sometimes it's less. So same with markets. Today we're having a good day. We have 10 trades.
Yeah.
Amazing.
Yeah.
We have 1 trade. No problem. We have no trades. No problem. So like, you know what was the most unpleasant thing to wait for? Setups. But once I'm in the trade, I can wait forever, no problem. But waiting for a setup is very, like, I've wasted like days and days and and weeks, maybe months of my life waiting, because that's what trading is, and that was very hard for me, by the way. Like, waiting for a setup is very hard. It's much harder than holding a trade.
Do you know there's truth in that? Very often traders, in order to feel as traders, they think they need to execute. Buy, sell, buy, sell, buy, sell. Be active in the markets. You know, London session.
The click takes
I'm trading.
like a millisecond.
Exactly.
That's not trading. Trading is waiting.
But this is what traders kind of associate. The clicking is me being an active trader participating in the markets. London session, New York session, London. And that's exhausting. You know, you need to really, collect data on all of it, but then understand, like you said, what works, what doesn't work. What's your best performing session, least performing session? What's your best performing asset, least performing asset?
Let me tell you why this was hard, because it felt like I was doing nothing. And I don't like to feel that. I like to be active. I like to be productive. So trading can get into your head in different ways, and then like in mysterious ways. Like, what have you done today? I waited. What a bad day. But no, actually, waiting, we get paid for waiting. So we need to understand that.
And you don't get paid per hour, and at the end of the day you have a check waiting for you, but it's like the whole thing.
Exactly.
And that's what the whole business is built on. And I say business because most retail traders who are successful treat it as a business.
Of course, it has to be.
So it's extremely important. I will ask a last question, and this is something we discussed yesterday, but I really want to touch on that topic. A lot of retail traders may think that institutional traders have the advantage. But what are your thoughts on this in terms of, with the type of access to knowledge retail traders have these days?
In comparison to like these days, they don't have no advantages. They think, retail traders might think institutions have like the upper hand, but they don't. What they do have is more liquidity. They have better pricing. They have better spreads, the whole thing. But in reality, like in terms of access, not really. Unless they're like insider trading. Otherwise, they have nothing. And that's not a common thing to happen, like insider trading. So when things are normal, a retail trader can be as informed as an institutional trader. But what are the advantages that those guys have is the structure.
Beautiful. And we're going to finish our conversation on that note. That structure is extremely important. And it's true, because as a trader, retail trader, you have to be your own boss, accountability partner, colleague, and everything else in between. That's why you need to have a structured approach. You need to have rules. You need to have, let's say, your trading policies that you are implementing into your business, like you would to any business, to make it successful. So, guys, what I would like you to do is I would like you to comment whether you are surprised what institutional mindset actually is, what is the approach, and also what have you learned from it. And that will give you a chance to win 2 100K challenge accounts, and we are going to pick the winners and announce them in the next Thursday blog. And Saif, thank you so much.
Thank you so much for having me.
It was absolute pleasure.
I enjoyed it.
I'm really happy. And guys, you can catch Saif on every Sunday in a Beyond the Chart series, where you can learn more from his wonderful institutional mindset and his knowledge about the fundamental analysis.
Thank you.
Thank you so much, traders. Thank you.